All right, everybody. Welcome to 12minutetrading.com. Our live market update today is Thursday, the 10th of November, and we've got a lot to talk about today. We've had an explosion of price happening with the CPI. We've got other things to talk about in different markets as well, too. But, Dave, how would you characterize today's move on the CPI? What do you think the people are thinking?
Well, so it's funny. We came in at the same CPI that we were in February, 7.7%, right? So we haven't budged for the whole year, but it was essentially a beat to the downside, right? So we came in lighter than expectations. CPI has come in the last few times higher than expectations or around expectations. And of course, any whiff, any hint that inflation is easing is a reason for the Fed to slow down. Let's put it that way. So the markets are taking that, and the markets are a forward-looking instrument. They're always trading on the future. And so people are piling in on that news today. And then they're also piling in probably strategically ahead of the next jobs report in December, because we have a lot of layoffs happening, right? Meta laid off 13,000 just this week. You had Twitter laying off last week and so on. So there's a lot of jobs being cut. And if you listen to the Fed and all their job owning, it all comes down to inflation easing and the labor market easing, right? And not being so good, right? Effectively, the Fed wants to crash the jobs market, right? That's a good thing for them. I don't know if that's a good thing for all of us and the economy, but it's a good thing for them. And so I think markets are seeing this. They're looking ahead now to what could be a lower jobs number, which then becomes maybe a lower Fed print. I think 50 basis points, and I think 75 is at zero now. And 50 basis points is at 90%, and even 25 is creeping up. So that's kind of where we're at. And if the Fed starts to ease or slow down, the markets are going to really like that, because that means we're at the end of the tightening period. So that's what we're getting. It's all forward looking.
What I'm seeing for the March Fed funds futures is that we only have 100 basis points left. So probably half of that will occur, like you said, in December, which is on December 14th. And then we have I believe it's a late January meeting where maybe it's just down to a quarter point. I mean,
or maybe it's maybe they don't do anything at that one, right? That's kind of what I think markets are looking at.
Yeah, that could be the case as well too. Typically, they don't like to go from doing something to doing nothing, because that usually tips the hand that they've gone too far. So they'll typically bring it down to quarter point, which is very similar to what they did in 2007. So 2007, it was every meeting, it was everybody's holding their breath, because it's is this the time that they stop doing it? Because every single meeting was quarter point, all the way along. Yep. And then finally, when they said, hey, I think we're going to do nothing, then that was actually kind of a bad thing in the markets, because they knew by that time the Fed was already too late. So we may have something similar to that happening in, and I would say in the winter or the early spring, is that the Fed has historically gone too far. They always go too far, to the point where all of a sudden everything starts melting down around them. So I think
it's on both sides. They go too far when they raise, and they wait too long to raise, right? They're always late to the party on it all. So they've already gone too far in my book. Again, they're now mentioning lag for the first time. They've done the fastest set of rate increases to the highest levels possible in the shortest amount of time ever. We haven't even begun to see the brunts of it. Maybe this is the first print on that. But I think the bigger question is, and I'd like to throw this to you, is this just another bear market rally? Or have we found a bottom off of this, and this is going to be our bottom moving forward and heading higher? Or at least the floor.
Well, I wish I knew the answer to that. Let me. I'm going to bring up the charts for this part of it. So here's the S&P 500, and you can see that the price today, the current price, is jammed right up against the high water mark at the beginning of this month, which is just about 3,900. So we've been talking about this Darvas box for quite some time, where we're either going to be breaking out above 3,900 or breaking down below 3,700. I will trust this print if we finally close above 3,900. If that does occur, I don't think it's going to be easy, but I think we'll eventually end up somewhere around 4,100. So I think what will eventually happen as we get up to 4,100, I'll tell you what, I'm going to bring my pen over here because I seem to be unable to talk without speaking to a pen, right? So you get used to doing this. So I think what'll happen is we got a pretty good shot of getting up to somewhere around 4,100. But after that, I think what happens is, so if we get up to 4,100, what'll be important is the move that's after that. So you would expect to see some type of consolidation after that, or maybe a pullback or something like that. From there, one of two things will happen. So we're almost talking like chess, like the move after the move after the move. And so either we're going to see a drive into new highs from there, or what we're going to see, the opposite of that move would be more of a pop up to a lower high, and then the next bear swing starts to the bottom with probably with a lot of velocity to it. So right now, I think there's a good shot that we do end up higher from here into the next week or so, but it's really the move after that is the one that I care about right now, and I think is the important thing.
Doc, the thing that this is a heck of a move. Yeah. And we've seen these type of things up and down, this year. But the thing that has surprised me the most is if you pull up that daily chart on the SPX, look at that energy. Look at the fractal energy and what it's done today. It's gone higher. It hasn't released any energy, right? So it's actually gone up to where it's almost in the 60s now, which is incredibly charged. So that has enough energy to trend several hundred points more in either direction at this point.
I've done something a little bit different here, and this is the first time I can remember doing this in some time, but I think the velocity of this market is very, very different from the way that we were using fractals through this period of time. So the velocity just changes. Like, I don't think we need to look back on 14 candles anymore. I think 9 is enough, because what we're seeing is, and this got to me as we dropped into the bottom of September, early October, is that we had a 19% move to the downside, and the weekly chart was not in exhaustion. And that's because the market's moving faster than what a 14 period fractal energy is going to show.
Right.
So what I've done is I brought it down to 9 for the weekly and the daily. Honestly, don't care what the monthly is. The monthly, we know it's huge, but the monthly is not really used for timing. But to your point, yeah, we do have, as the price is going higher, we still do have markets with the energy going higher. Most of the trend that we're seeing here, it's still to the downside on the weekly chart. Yeah. So actually, if the price goes higher,
sideways, actually, if you look at, getting back to the highs from early months, so we've gone sideways effectively, and that's just charged it up. So we are on the precipice of a major move. Exactly.
If the weekly chart, if the price continues going higher, it will actually charge this chart further up. And this is sort of the in between the lines kind of thing that you use with charting, right? Everybody is sort of used to seeing the charts and indicators from one point of view only. I think what happens is if you stare at these things every day for the last 10 or 20 years, you start to see, like, in between the cracks, you start to see the colors that are in between some of the signals that are out there. And this is exactly one of them, is trying to figure out not only the signal that we have today, but also what's going to happen next. What's likely to happen next? What would have to happen with the price for the market to be happy to satisfy all these energy conditions? And that's usually the answer I try to get to.
And what are you seeing now? I've got my thoughts on that, but what are you seeing now?
Well, exactly what we've been talking about. If the price goes higher, it makes especially the weekly chart, it makes that happier, because markets always want to go from periods of, when they build up a full level of energy, then they want to trend like crazy. And then when they go into exhaustion, then they want to do everything just to recover. And so just like what we do as human beings, right? We get fired up about something. We want to let it all go. And then once we're exhausted, we're laying on the ground. It's like, all right, leave me alone. I don't want to do anything else right now. And it's the same thing. This is what markets do. So
Yeah, I think the key, one of the keys to this is that weekly chart because it's charging the weekly chart back up from really where it was kind of in its exhaustion zone, right? We had gone, like you said, 19% to the downside. So we've exhausted that last energy swing on the weekly chart down. And now the best way to charge a chart is to go back the other way, right? And so that's what we're seeing now is we're going back the other way, and that's charging the weekly chart. What'll be something really serious to watch is when that weekly chart is charged fully up again, because now you'll be on a precipice for a really big move. A typical daily chart swing is going to go 7-10 trading days, right? A weekly chart can go for weeks on end, right? So that's the next big swing, and it could be charged up about the time that jobs report comes out in December. So that could be really interesting.
Something else that we need to keep an eye
go ahead.
on is the Dow. The Dow has been the leader of this market, and it is above the 200-day moving average.
Yep.
It is above the descending trend line. This could actually be breaking out. This could be a major breakout if we see the Dow get above 34,000. So this is something, and look at all the energy that this thing has got to move. There's no shortage of it. So
What's the monthly doing?
The monthly
right now?
is the monthly is just so slow. It's not going to, that's a bull flag on the monthly. That's the crazy thing. That is a bull flag on the monthly to, not even to a 50% retracement. So we lose sight of all these things. If you don't put multiple time frames on your charts, you lose context of what's going on. You lose sight of what's happening at the bigger picture. And this is what keeps us grounded, is using this different mix of time frames.
Well, and that's the thing. That's why I point out the monthly, because it's really, still uptrend, if you will, overall.
It is.
Over the course of time. And it makes sense, right? A lot of rotations happen from like the techs to the Dow and those stocks. But if things start to get really hot again, and we really do start to slow down with the Fed, or even, start to do QE again, which is amazing. Some people are already talking about that, but then you'll see that rotation back, right? And so it'll be interesting. But I think for now, there's two things that I think are really important, right? We've got a daily energy release that's going to start to happen probably within the next 3 to 5 trading days, and that's going to take this whichever direction, probably for the better part of what we got the rest of the month. Right now, I'd say that's to the upside. But the other thing that just sticks in the back of my mind, and I think a lot of you guys have been seeing it, or at least, my students, I've been sharing it with you, is that there's a lot of people doing the analog of 2008 and 2022. And it's amazing how uncanny the 2008 analog and the 2022 analog have followed each other up until about this point. Right about this point was when 2008, it really fell off the cliff. And that took it down to the bottom for that bear. And so what happened was you had this kind of double top before that happened, right? So you had this run up, this pullback, and then this another run up to that same level. And then that's where you dropped and fell off the cliff. So Are we there? Is this the double top? Is that, is that where the daily energy is going to take us next? It's just sell it all off and take it down. Based on the CPI print, based on other news that's out there, I'd say probably not. We're probably ready to break that trend, but that's something that does stick in the back of my mind to watch out for. And if it's going to happen, it's going to happen in the next couple of weeks, and that trend's going to start in earnest. So
this would be
the only thing to watch.
This would be it, because if you look at this, I mean, it never got above that initial, just like you said, there's a double top. The move in September, that was caused by the SEC prohibiting shorting financial stocks. And this is what caused that squeeze to the upside, which was really the death knell. If you look at this thing here, that was really the death knell. But if we take that to today's chart, here's your double top right now. And this is why I'm so, I'm pounding on the table, like, we've got to break out above this. So whether it's today or whether it's tomorrow, we've got to break out above the 3,900 level on the S&P cash index. And it's got to be clear, and it's got to be convincing. And the shorts have got to basically bail and let this thing go, almost like a matador letting a bull go through, right? So like, it's got to get up to 4,100, because otherwise, if we drop here, then what we're going to see is something like this, very similar to that. Then we drop down to a lower high, and then this becomes just another bear flag. So either we do that, or we jump up to 4,100, which starts a whole new series of circumstances, which could lay out from there. But anything could happen at this point. So
we've got some interesting things that will come about over the next, even maybe tomorrow and stuff. Remember, we just had this election in the U.S. and right now it looks like the Republicans will at least take the House of Representatives, which the market likes, right? The market likes gridlock in Washington, and one house is really what you need to have gridlock, but it's not done yet. Right. And they're still counting. Amazing that, we live in today's age and the United States can't count their votes, and it's going to take a week or longer. Right. But there's a couple states, and one of those is Arizona, and Arizona is a big one right now. And so over the next day or so, I guess a lot of those results are supposed to come in, and that, there's a Senate seat there and stuff too, which is the other side of the house, for the United States Congress. And so I think we need to get that confirmation that the Republicans have taken the House. Before
what's your confidence
for the market?
What's your confidence level on that happening? I'm having a difficult time getting.
I think last I looked, the Republicans were at like 208, 209 seats, and the Democrats were like at 185 or so. And you need 218 to own the House,
right?
Essentially. So I would think with, what's left and just the trend that, they'll get to 18. It's just, everybody thought they'd get 30 to 40 seats over the Democrats. I don't think that's going to happen. Maybe 220 to 225. But hey, that's control, right? And that's all the market cares about, right? So, and then we're going to be in limbo for another month because now Georgia's in a runoff again, just like it was in 2020. And so you're going to have that come into markets because the balance of the power in the Senate is not going to be decided now till December 6th, right around the same time the jobs number is coming out, right? So it's you're going to have all that drama for another month, right? So that'll be interesting. So,
the most important thing for the House, I think, is not necessarily the absolute number there. It's the change in leadership would be absolutely huge, I think, for the market, because that Nancy is
stopping the spending,
right. Nancy is who's got everything through the Congress lately. So for better for worse, that becomes a huge bogeyman right there.
Yeah, and that the market will like that. And so, but it's not confirmed yet, right? So, between today, tomorrow, you may get some of those final seats done, right? I think I saw there's one well-known congresswoman out of Colorado that was shockingly behind, up until this morning. I think she's up by 100 votes now or something.
You talking about Boebert?
Yeah, Lauren Boebert, right? So, and so there's like some of these races are just so tight and stuff. So we'll see, but that confirmation, I think the markets, that's what you kind of saw the sell the news event yesterday. You had that, this huge buildup and the quote unquote red wave, which became a red ripple. Markets ran up into that expecting to get a pretty definitive result, on election night. Probably they knew there'd still be some things that would go past election day in some of these states like we're seeing, but it wasn't definite, right, on election night now, right? We don't have that final confirmation yet. And so we sold off yesterday, and we sold off into the CPI too, right? It was like a sell the news, take some profits off the table. Mm-hmm. Okay, it looks like the Republicans will get it, but it's not confirmed yet. And we got CPI tomorrow. And then obviously today, CPI hits, and for the first time, it's, pretty decently below expectations. And so, off to the moon we go, at least for now. And we seem to be hitting kind of the highs of the day in some of these things. So I think, that 3,900 mark has a good chance of keeping it today, because a lot of times you'll see on days like today, the pros, remember, the amateurs open the market, the pros close the market. We're coming up on 2 p.m. That's when the pros are going to take over. So that final hour today is really going to be the key to all this. Do the pros run this thing up to the highs of the day and keep it there into close, or do they sell it off? To me, this is shaping up like one of those days where they're going to run it up into close and keep it there. But time will tell, but the next 2 hours will be pretty interesting to see that. And we got some other things happening out there, right, Doc? This goes to some of the things you've been doing over the years in the crypto market. So this is all going on. And then we've got like the whole crypto market melting down. We've had a lot of, I won't even call it volatility. I would say carnage in the crypto markets this year. But the golden boy, Sam Blankfein, and FTX went down in the span of 2 days? I think he went from being worth 16 billion to now he owes 650 million in the span of 2 days. So what is going on in the crypto markets? And can that bleed over at all and create a contagion that could come into markets? Sitting here with this daily energy ready to go, can that affect things? What do you think?
Well, it's probably best to look at the chart here on this. It's just like everything else, what we've had over the last couple of days has been the number 3 exchange in crypto, which was FTX, which you've seen everywhere. You've seen them on umpires' baseball uniforms. You've seen them on Formula One teams. You've seen them on stadiums. These guys made a tremendous...
Tom Brady, right?
Yeah.
Tom Brady, right?
Yeah, these guys made a tremendous amount of money in a very short period of time through their arbitrage skills because crypto is a very loose market. So they made a ton of money. But unfortunately, they didn't know when to stop because they overplayed it with leverage. They took an investment from the number 1 broker, which is Binance, in I don't know if it's China or if it's if they're located somewhere offshore of there.
It's China. They're out of China.
Yeah. So they took a small investment from them, which turned into be a big investment, which turned into be like $2 billion from the Chinese company. And then the Chinese company 2 days ago found out that their books for FTX were not so solid. And so they said, hey, we're going to start selling this, it's their token. It's almost like a company's own stock. It's the same thing. It's the same idea behind that. And so you can see the liquidation that this started just in, actually, this is not their coin. Let me bring up their coin here, which is kind of crazy. Let's see, FTT has gone from...
This is what real capitulation looks like.
Has gone from $26 a coin, and it went down to about $1. But it went down to about $1 at one point. And so I don't know if there's any hope for this thing. It may be done. We've seen stocks go down to zero before they become delisted, and they become part of the pink sheets and stuff like that. So this is essentially the same thing happening here. Is that another company who had invested in them started to disperse their holdings and say on the open market, and that started an avalanche of sales, and it's hit everything across the board. But some of the more important assets seem to have bottomed out right now. Looking at this on an intraday chart, that's a pretty good bottom with some pretty good volume. So is it over? I don't know. And the problem here is that there may be actual loss of funds, which are not guaranteed. So yeah. A lot of times, we would never imagine in owning a stock account. Although this has happened before. If you remember Peregrine Financial Group, PFG, and this is maybe 10 to 12 years ago, PFG went out of business. They used to do currency pairs like Forex trading and things like that. This is a Forex broker. And this is maybe, like I said, maybe 12 years ago. But they were using customer funds to do investment. They were doing bad things and all of a sudden, boom, they're gone. Overnight, literally shut down. All the customer funds grabbed. And no access. I don't know whatever happened to that, but that's been happening before with currency brokers. It's happened before, and now we've seen this happen a couple of times with crypto brokers. Now, the great thing about crypto is that you can actually pull your assets off of the exchange and stick them into a hard wallet, which is nothing more than like a flash drive. Or you could write them down on a piece of paper if you wanted to, or some people actually ink them on their forearm, do it that way. There's all kinds of ways that you can store a digital asset like that. So the great thing about an exchange like that is it allows fair trade, but you don't want to get caught like when the company goes down and your crypto is sitting on there. So I don't know what the people from FTX are going to, there's literally $15 billion of customer funds sitting on that exchange, or there were. Yeah. And may have been transferred out, may be gone, may have vaporized into other people's accounts by this
Well,
point.
that's what they're saying now. Is there was this sister company that was set up more like a private equity firm called Alameda that they were funneling the funds to and taking some risky bets with, and that's what triggered Binance when they saw that to start their process. And so it may be gone, right? And so there's, I mean, like, and there's guys like Dave Portnoy and all, and you know, Tom Brady and all these guys that, you know, had on the exchange and stuff, and they may not get their money back, right?
Yeah.
So it's just this is gonna be a very interesting thing to watch play out. The other thing is that it is bleeding through to the private equity markets, like in the U.S. Like Sequoia was invested in them pretty heavily to the tune of, I think, you know, 200 to 300 million or something like that. You know, or they had a pretty sizable investment. So they're gonna have to. They actually came out and said they're writing that off as zero. They're marking to market as zero on that yesterday. So, you know, there's some people getting hit pretty good out of this. So it's it's definitely, if you are somebody who is more of a risk on person, as they say, be fearful when others are greedy and greedy when others are fearful. With, you know, Bitcoin taking a hit down to 15, 16,000, some of these others that are, you know, more of the legacy, but, you know, the coins that have stuck around for a while, it may be one of those times to start taking a look if that's your thing.
You know, I was doing a webinar last night through Ready Set Crypto, and one of the things that we talked about was if you remember Brexit back in 2016. Brexit back in 2016, we had 3 days of like utter, you know, sheer terror, like, what just happened? All of a sudden, everything was all up in the air, right? Because we dropped, I don't know how many percent, but it was for that time in a very non-volatile period in 2016. All of a sudden, boom, the equity markets just bottomed out, but then they slingshot higher from that. Mm-hmm. So I've seen this so many times where it's like you take a fearful event, and everybody, as soon as everybody sticks their head in the sand, all of a sudden, the real buyers come out. And this is actually what's happened in crypto here as I'm looking at today. I mean, I've got Polygon up 35% alone today from yesterday's close, and Bitcoin is up 9%. So there's, I mean, across the board, there are some pretty staggering numbers that people are stepping in and taking the risk right now. And I think a lot of this has to do with the CPI number, obviously, sure, because CPI number means that we're risk on again. That's what it should mean.
Yeah, and one thing that I've seen, you've probably seen it too, is that the crypto trades alongside the NASDAQ pretty well. If the NASDAQ's rocking higher, crypto's typically rocking higher. If crypto's down, NASDAQ's down. They seem to be, at least for now, somewhat correlated because of the risky type assets, I guess.
That's all happened in the last year. So yeah, before that, they had no correlation whatsoever. But what's happened is the same people that are investing in tech are also investing in crypto because it's starting to cross the chasm with that. So you're absolutely right. I mean, we're starting to see a big correlation between the two.
Nice. Anything else for everybody out there? I think we've covered just about every major topic out there right now. I think the big thing for me is, you know, well, like a couple things, obviously holding that 3,900 and, you know, staying above it and seeing if we can head higher. I would like to see things grind higher from here. I don't want to see like a parabolic run up higher. That's usually never good. If we release this energy and go parabolic, we typically will fall right back down because we went too far too fast. So I'd like to see things grind from here, like make this move today kind of the floor, and then we grind, right? But then we've got that energy that's going to start releasing here in the next, I'd say, 3 to 5 trading days. That's going to start playing out. So those are the two big things right now for me to watch.
I tell you what, I cannot remember 3 contiguous weeks like this that have had more landmines and risk in them than what we're going to finish tomorrow. I do not remember 3 weeks that have been like this, that have been filled with as many event risks as we've had. Fed meetings, we've had PCE, we've had the Fed meetings, we've had a midterm election, we've had major earnings
CPI.
Coming out.
I have to say one thing about that too, as you say that, as I think about like, and we've been trading like our target 100s and like my double strategy and everything through this and yes, we did a little bit of risk off on things ahead of events, but man, those have been performing so good. I've been really happy. These are great tests for your strategies, right? Times like this are great tests for your strategies. And so I've been very happy with the way those things are performing. We're consistently racking up the wins on those. So you're doing that every day. So kudos to you, because it's been a heck of a time to trade, short-term options, and you've knocked it out of the park. So,
Well, there are times where we don't look for trouble. There are times where we say, okay, the next 2 days we're going to sit on the sideline and we're going to exercise our muscles with sim trades, right? So we're going to keep putting trades on so that we in the rhythm of it. So we're used to doing that. But there are times where it makes no sense. For the risk premium is not enough to account for the actual realized volatility that unfurls from these types of events, like what we're seeing. I mean, 150 points to the upside today. Wow, that's a big move.
Crazy. Yep.
So everybody, thank you for tuning in today. Whether or not you're coming in through, whether or not you're joining us live, it looks like we got a pretty good crowd here live.
Good.
Or if you are watching this on a replay, which is what most people are going to be doing, thank you for joining us. Thank you for subscribing. Or if you're not subscribed, please. It doesn't cost anything. It's just hit that little button, and then make sure you hit the notification bell that's on there.
Close to 100. Get us to 100.
Yeah, get us to 100 today before the end of the day.
Mark.
Right. So also check out the community tab on our YouTube page, because we're going to start putting polls and sort of other things that are out there. As something hits, it's a perfect place for us to just share our thoughts with that. So thank you for joining us today, and we will be back probably early next week, right? We'll be doing this early next week.
Next Monday.
All right.
Next Monday.
Thanks, everybody. We'll see you then. Okay, we are good to go.